Welcome to the New Jersey Real Estate Show. Now, here are your hosts, Tim Waller and Matt Josephs.
Hi, it's Tim Waller and Matt Josephs from the New Jersey Real Estate Show. We have a very interesting topic today, which I'm sure all our listeners will be very interested in.
Hi.
And that's the discussion of mortgage financing, the pre-approval process, and the entire do's and don'ts when it comes to mortgage financing. I'm very excited and pleased to have with us today Dean Scaduto from Coldwell Banker Home Loans. Welcome to the show, Dean.
Thanks, Tim. I appreciate that.
So, Dean, how are the interest rates right now, and why, in your opinion, is it still an opportunity of a lifetime to buy and finance a home today?
Well, interest rates are amazingly low. I mean, you're talking 3.25%, 3.5%.
Wow.
Even under 3% for ARMs. So they're at historic lows.
One of the first homes that I sold,
18%.
FHA, 14.5%.
Yeah,
I
it's
can't
crazy.
tell you what the payment factor is for every $1,000 you borrow. I think it was like it cost you almost $1,200. And today, what's it cost you? $450 to borrow $100,000?
It's a huge advantage. I mean, I just refinanced somebody that was at 6%. So not that long ago, interest rates were 4 or 5%. At 3.5%, you're able to buy a house that at, let's say if you were at 4.5%, 1% higher, which was not that long ago, you're talking about the difference between a $400,000 to a $450,000 house, like a $50,000 difference.
Wow, that's incredible. That's incredible. Well, let me ask you a question, because a lot of time buyers, they're out there looking, and before they talk to a financing company or a mortgage company, they're out looking at houses that may cost $600,000-$700,000, only to find out later on that they can afford $350,000. So my point or question to you is, when should a buyer come and get pre-approved if they're serious about owning a home?
That's a great question. It can't be early enough. Even if you're thinking about buying, you're not ready, you might want to buy next year. You need to have that financial checkup ASAP. It's free. You might as well do it. Your credit report is run. You'll see if there's any credit issues. It'll give you time to work on it. You need to know exactly what you can afford, what your payment's going to be way up front. So it can't be early enough.
Wow. Okay. So let's take it one step further. Someone gets pre-approved for $400,000. At property taxes of $8,000. But now they find a house they're in love with. Property taxes are $12,000. How does that affect their affordability?
Well, it definitely affects it because your payment's now that much higher, and you want to have us, or you want to have a mortgage advisor like me, run that through the software and make sure you still qualify. So the great thing is, you come in or you call me, I take your information, we put it through the software. Once it's in that software, I can run all kinds of scenarios. People are out all the time looking at houses, calling me, texting me, hey Dean, here's the story, I got this house, these taxes, blah, blah, blah. I run it through and I give them a payment, make sure that they're qualified. This way they know right on the spot. So get your information to me, get it in the software, then we can keep running scenarios for you, make sure.
Now, most buyers feel that if they get pre-approved through one lender and they go through another lender and everybody's running their credit report, that's going to decrease or reduce their credit score. Is that true, or is that a myth?
Wow, Tim, you really did your homework for these questions. Nice. That is a myth. But that's a great question, because the score you get is called a FICO score. And FICO is the name of the company that invented this score. And they have a great website. It's called myfico.com, myfico.com. Go to that website, send your clients to that website. Great credit information. Matt, you too.
Okay.
Good stuff.
All right.
On that website, and I refer my clients to this all the time because that's a common question. I don't want you to run my credit. I had it run last week. It's going to drop my score. For 45 days from that credit report run, the next 45 days, all your mortgage credit reports do not count against your score.
Interesting.
45 days. Well, the reasoning is this. If you're shopping around all these lenders for a mortgage, the FICO model knows you're only getting one mortgage. So there's no reason to drop your score. If you go shopping around to 4 or 5 different credit card companies, you could open up 4 or 5 different credit accounts. So that's the reasoning.
Now, my good friend and co-host, Matt, he's shopping for a home. He's a veteran, and he's unaware that veterans can purchase a home with 0% down. Explain to the audience what's the difference between an FHA loan and a VA loan.
Sure. So there's basically 3 types of loans that are out there in the market that we offer. You have your conventional, that's the mortgage that most people get. Then there is the FHA, and then there is the VA. The FHA, Federal Housing Administration, and the VA both insure those mortgages to the lender. So the VA says you as a lender can lend with 0 down, and a VA is going to insure that loan. So it's a great deal because when you put less than 20% down, you have this extra payment called PMI, which is private mortgage insurance. That could be like $250 a month.
Wow.
On your
That's a
mortgage.
huge savings.
VA, 0 PMI. You pay one time at closing to the VA, but it's not out of pocket. You can add it to the loan. So great
nice.
deal. VA
You didn't realize you were entitled to that, did you,
I didn't
Matt?
realize I was a veteran.
Great.
But now, you know. I got a question for you. What is the lowest credit score that a buyer could have and qualify for a mortgage?
Well, the FHA allows you to go under 600 per their guidelines.
Okay.
But most lenders, I mean, we don't go under 600, and most lenders use that 600 as their risk tolerance. So basically,
And 600 is what? Well, that's fair? Where is that, 600?
That's not good.
That's not good.
No, 600 is
No,
not
but
good.
where, like, it's just not good?
Yeah.
That's what it's called?
I would say 600.
I haven't checked my credit in years.
600 is poor.
Oh, it's poor. Okay.
Yeah, yeah.
So, but you'll go down to poor?
Yeah.
Okay.
Well,
but then what happens, though? What's the catch? So you'll go down to poor,
You
and
pay-
you lend to somebody who's got, poor. Then what? It's a higher interest rate?
No, actually, that's a
Really?
good point. So a 600 score is an FHA loan.
Okay.
The FHA is allowing, so we're going to do that loan, sell it to the FHA afterwards, and they're insuring it. So they're saying, we will insure you, lender. You can lend down to 600 FICO score. If the buyer defaults or forecloses, FHA will pay the lender.
Okay.
So because we're insured as a lender by the FHA, we can offer a low rate.
All right, because I've always wondered how people that I know to be, not making a lot of money and not really smart with their money are buying houses, and so that might be the answer.
That's what the FHA is good for. In the housing boom, there was, basically, if you were breathing, you got a mortgage.
Right.
Literally.
Tim
If
said
you
that.
were,
We heard that before.
if you were breathing, you got a mortgage. And there were all kinds of lenders opening up out there supplying mortgages. And that's where you had those subprime lenders.
Right.
They're all gone. Now the FHA has taken a bigger role, and they are lending now as the new subprime lender.
Okay. So poor people with poor credit can still theoretically buy a house.
I don't know about poor people because now you have to, it's not if I'm breathing I can get a mortgage, it's I really have to be qualified.
Okay.
And they really vet you out.
So you could be really, like, say you've got a good income, like a decent income, but your credit score is not great.
Correct.
Then you could still get the,
That's
so it's
right.
not both.
And also, Matt, to add on what you said is your capital. You have very little capital. With FHA, you can go with only 3.5% down payment. So
Okay.
if you were buying a home for $300,000, you would need what, 10.5
What you
as a
have,
down payment?
Well, you have it starts with VA. VA can go 0 down. Conventional will go 3% down, and FHA will go 3.5% down. So you have really low down payments. But it's harder to get a loan. This is kind of how I explain it to buyers. You have to pass 3 tests to get a mortgage, and you have to pass all 3. You can't just pass 1 or 2. One is the credit test. We run your credit. You have to have a decent credit score or down to
FHA
a
600 or better.
The second test is the asset tests. The underwriters will verify that you have the money for your down payment and your closing costs and where it's coming from. You have to supply that. And the third test, where most people get stuck, is called the cash flow or the debt to income test. Roughly, all of your monthly payments have to be less than 50% of your monthly income.
Okay.
Your monthly payments are your new proposed mortgage and anything on your credit report. Car loans, student loans,
And
things
I
like
find that fascinating because back in the 80s, after 1984, say 1984 to 1992, lenders used 2 ratios. 28%, which would be your principal, interest, taxes, and insurance, and 36%, which was your principal, interest, taxes, and insurance plus reoccurring debt. They've really stretched those ratios.
FHA really stretches it. I mean, you can go
Wow.
up to a 57%. And
That's
get
incredible.
It's kind of dangerous to me. It's kind
So
of
is that going to be the next
Does
thing
history-
that's going to make everything fall apart?
Does history repeat itself?
Yeah, it sounds like it's
I
about
hope
to.
not. I mean, at least the good thing is that debt ratio is now really tough. You really have to document it. Where before, you could just say, hey, I make $200,000 and nobody checks and you're breathing, you got a mortgage. So it's tougher now.
All right, now we're
That's
going to go.
amazing.
Now we're going to go back to Matt the veteran. Matt the veteran has $500 in his checking account. That's all that he has.
Lucky me.
He has good credit.
He's not getting a loan for
He's-
$500.
He's time out. He's been on a job for years and years and years, and he found a house where the seller will pay his concession fee. He's going to finance his funding fee. Why couldn't he get a house if he only had $500?
Actually, he could.
See that,
Well,
Matt?
how is that? Because of the VA?
Correct.
VA loan.
So I should have gone into the service, is what you're saying.
Absolutely.
Damn it.
Oh, it's not too late.
Yes, it is. I'm almost 40.
From the halls of Montezuma.
He's over the hill now for that.
Yeah.
All right.
All right. So veterans can. So that's cool. I mean, if anybody deserves
But I
that,
think,
it's
yeah,
them.
I think they've earned that
Yeah.
right.
Exactly.
100%. 100%.
But other than that, though, there's no way with that scenario that Tim laid out. There's no way that somebody could get a loan or a mortgage.
No, because the next lower down payment is 3%. You can get gifts for your closing costs, or the seller can pay, but you have to have your 3%.
What if you want to buy a shed?
Doesn't matter.
and live in that?
Well,
You have to get a permit.
It's only a $1,200 shed.
does it have a bathroom?
No, you have to go into the house, but somebody's letting you put it on their property.
All right, Dean, let's do this. You have a buyer who's got good credit, good job, but assets are weak. Can he get a gift for the entire down payment?
Yeah, absolutely. You can get a gift. So that's where you have to pass the 3 tests, and as long as you can document where it came from, it has to come from a family member, a brother, a sister, an uncle, a cousin. It cannot come from a friend. That's not allowed. But you can get a gift for the entire amount.
I'm sorry. You're saying the down payment is a gift? So if I go to my dad and I say I need $20,000 for a down payment, and he says, okay, here it is,
No problem.
that's okay. But if I go to Pete over there, our engineer,
Correct.
and I say that to him,
That's a problem.
why is that a problem?
Well, the Fannie Mae, the guidelines that we all follow, state that the gift can only come from a family member, from a relative. Simple as that. That's the tough part about the mortgage process today. It's not about the qualifications all the time of the buyer. It's about interpreting the documentation that Fannie Mae is requiring, and that's it.
Okay.
It's got to be that way or no way.
We'll be back in just a moment.
The New Jersey Real Estate Show is brought to you by the law offices of Joseph C. Petriello, located in Wayne, New Jersey. To contact them, call 973-890-7262. That's 973-890-7262. Are you purchasing or refinancing a home? Do you need a free same-day pre-approval? Then call Dean Scaduto from Coldwell Banker Home Loans at 201-322-3456. That's 201-322-3456.
We are back. Dean, I have a real important question for you, but first I want to comment on that tie. I like that tie. Where'd you get that tie
Oh,
from?
thank you. Well, I wore my power tie because I know you could feel me through the microphone.
Well, I don't know about feel you,
My
but it
power
goes. Well,
shirt.
I'll tell you, that beard is nice.
What are there shamrocks on that tie?
There are. It's my lucky tie.
All right, nice.
Green shamrocks.
And I like the cufflinks too.
Thank you.
Dean is Dapper Dean.
Yeah, he just stepped out of GQ to come to this
Yeah.
podcast.
Yeah.
I have to have my banking image here.
But I have a $100,000 question for you. The market has heated up in certain markets,
It has.
and inventory is scarce. So when a good inventory comes on the market, a lot of times you have multiple offers. How does a buyer put themselves in a position to be stronger than their competing buyers?
That happens all the time. And that's a great point. So as you're representing your buyer, you're going to present an offer to a seller who has maybe 3 or 4 other offers. The most important thing you can do is have a pre-approval, A, that the seller's going to recognize the name of the company, and B, that you know the mortgage loan officer who did that pre-approval. Because think of it like this. You have a buyer that comes with a pre-approval from Shamrock Mortgage Company. You present the offer.
Like the shamrocks on your tie?
That's right. Seller has multiple offers. Seller calls you and says, hey, Tim, I got your pre-approval. How strong is that pre-approval? Did they send it to an underwriter? Did they pull the credit? 5 questions. And you're like, I don't know. Came from some guy from Shamrock Mortgage Company. Or they come to you and you direct them to me. I'm going to do a Coldwell Banker Home Loans pre-approval. I'm going to run their credit. I'm going to get their documents. I'm going to send that file up front to an underwriter to review on the income. If they're self-employed, I'm getting tax returns. I'm not reviewing it. My underwriter's reviewing it. They are ruling on the income up front. Now that's solid. That's like the step just before a mortgage commitment. Now you send that offer in. Seller calls you and says, Tim, how's that pre-approval? Now what's your reply? Dean had to go to an underwriter. Here's his phone number. You can call him directly. He'll let you know how strong that offer is. So your offer either goes to the top of the pile, or with Shamrock, it goes to the bottom pile.
Well, let me ask you a question. Can someone actually start the mortgage application process without having a contract?
Yes, well, many companies don't send their pre-approval to an underwriter up front. So by us sending it to that underwriter, you are applying for a mortgage. You are having an underwriter review and rule on your income.
But did they pay the application fee?
No, you don't have to pay anything. Mortgage, good point. Mortgage pre-approval is free, no obligation. So here's the point. When you are working with a buyer, and let's say they come to you and they say, I have my pre-approval and, I'm done, and you want them to go to Coldwell Banker Home Loans or me because it's going to be a stronger offer, and they're like, well, I don't want to do that. I don't want them to run my credit, and what's their rate? At that point, they are not getting a mortgage. They're getting a pre-approval letter. That's an important point. It's not a mortgage, it's a pre-approval letter. You want that strongest letter possible.
Is there anything out there that they can get approved only subject to the house that they're purchasing appraising? Can you get something that strong?
Yeah. Well, we can offer a pre-approval letter with the conditions on it, similar to a commitment. So if I send it to my underwriter and they clear the income, and they could even clear the assets, meaning that I could get the bank statements and have that in the file and have the underwriter clear them. That means I'm issuing a mortgage pre-approval only subject to an appraisal. I can do that.
And that would make that buyer the gold standard buyer. And the listing agent would feel much more comfortable with a buyer that had all their documentation verified, opposed to all the other ones whose documentation has not been verified. So when you get into a multiple offer situation, it's a no-brainer for the seller to say, I want to take that offer, even though it may be a few $1,000s less, just because they have the assurance that this person's getting a mortgage.
Absolutely. Actually, I'm writing that down right now. The gold standard buyer. I'm going to patent that. Can I get that?
You know, with everything there's a price.
But that's a great point.
Oh, go ahead. I'm sorry.
No, I'm just saying that's a great point.
Oh, okay.
Yeah, gold standard buyer. Yeah.
I have a question. During the break, our engineer Peter was telling us about how when he got married, he had this huge influx of cash, some $20 million or something like that. And when he was going to get a mortgage, he had explained what that was. There are no receipts or anything, no law given or kept when somebody gives you a cash gift at a wedding. What do you do in that case, or what does a lender do in that case when they have somebody who, gets married on the 7th, and by the 12th there's like this big deposit made in the bank, and their income isn't that much? So what do they do?
Sure. Well, that's part of that asset test. So we're going to request 2 months of bank statement. And on that 2 months of bank statement, one of the questions I ask to a buyer, when you send me those bank statements, are there going to be any deposits on them? Mm-hmm. And that's how we start the conversation. And Pete will say, yeah, I just got married and there's like 20 deposits in there. So we will have to document that. That is a little different than other deposits. That we issue a wedding gift affidavit that they'll fill out. And it's a little less invasive for the person who's giving the gift. They're just going to document it, each one, write it on this affidavit and sign it.
So the gift givers are...
They don't have to do anything.
Oh, they don't? Okay.
On another type of deposit, let's say you get a loan, I think you were talking about from your family, right?
Yeah.
Of $20,000.
Yeah.
When that happens, they have to sign a letter that says they're gifting you the money, you don't have to pay it back, and then we'll have to see a copy of the canceled check for each of those.
Okay.
For that $20,000. So there's different ways to document deposits. The key is they all have to be documented. Sometimes it's torturous.
Right. The whole thing sounds torturous.
It is.
I don't know why anybody buys a house, to be honest
Well,
with you.
I don't have a psychology degree, but my role as a psychologist, the underwriter's job is to torture.
Well, I'm happy to announce after 32 years of being a real estate agent, I've earned my degree as psychologist.
Yeah. Well, another question that I had too was, like I work freelance doing this and video and all this other stuff. So with a freelancer, it's feast or famine a lot of times, or mostly famine. But so you have a freelancer who's doing well, but he's not. It's like a person who's salaried can say, I make $50,000 a year.
You're self-employed, right?
Yeah.
Okay. Well, that's the toughest buyer right now, because the good thing about being self-employed is you may have to pay less taxes because you can write off expenses as being self-employed, where W-2, you're getting taxed up to you know what. So it's good in that respect for you. But when you go to get a mortgage, it's bad, because let's say you make $100,000, right, of gross income. But on your tax returns, you write off 50 of it.
Right.
That's what the underwriter's using. They're using 50. Not the 100.
Okay.
So many self-employed buyers now are having a tough time. In the era of if you're breathing, you got a mortgage. If you're self-employed and you put down that you make $100,000, that's what you get the mortgage for. Nobody checks.
All right.
Now they check.
So now it doesn't pay to be your own man. So get a job is what you're saying.
Well,
get a job or pay your taxes.
Well, who wants to do either one of those? No, but yeah. So okay. So I got you. So it's tougher now for freelancers than it used to be.
It is. Yep.
So what would be like a way for somebody to kind of work that where it would work to their advantage?
Well, sometimes I'll have to counsel a self-employed person for the next filing of their tax return. So maybe they don't qualify now.
Okay.
So I'll have to work with their accountant for next year.
Gotcha.
Tell them this is what they're going to have to show. You'll have to pay taxes on that.
Yeah.
But then you have to decide, do I want to pay taxes and own a house or not pay taxes and not own a house?
Okay.
But I can help with that. And that's a good point going back to what Tim asked. Earlier the better for the pre-approval. I'm like the doctor. Come for a free checkup. Well, doctor's not free. I'm free.
Yeah.
And
Come for the checkup as early as you can.
Okay.
I got to tell this story. He's the only mortgage person that I know that pre-approved the buyer for me while he was on a mountain trail on his bike.
I did that mountain biking. You're right. I did that.
So what, the guy called you while he's mountain biking and he's like, can I get a mortgage?
Well, here's the great thing. I have a great website. It's too long to say on the air, but I'll text.
Well, say it. What is it?
Well, it's Coldwell Banker Home Loan / Dean Scaduto.
All right, so people can rewind it and play that over and over again until they get it. No, we'll have it. We'll put it in the show notes.
Or they just text me, and I'll just send them to my website. I'll usually text them my link, and then they click on the link. They enter their information. It's right there, ready for me to work on. I get to, I'm on the mountain trail. I get to the coffee shop. I get my laptop, and boom, I do the pre-approval. So it can be done anywhere, anytime.
Now, important, because everybody's rate conscious. So a lot of times, different companies offer what I call tickler rates, where they bring the consumer in, but that lender has no plan on actually giving them that rate. So does Coldwell Banker Home Loans have any type of rate guarantee that if someone else finds a lower rate that you'll match that?
Yeah, actually we do. Well, we're certainly in the top 10 largest lenders in the nation. I think we're the top largest lender without a bank. We don't do savings and checkings. We just do mortgages. We're the largest lender in the nation in that respect. We actually also lend to other mortgage brokers. So because of our size, we're extremely competitive. Yes, we have this $500 guarantee. If you get a good faith estimate from somebody else that we can't beat, we will pay them $500. That's how absolutely sure we are that our rates are competitive.
Now, how has this new banking regulations that went into effect, I think it was in October?
That's the TRID.
The TRID, yes, the TRID.
TRID, the dreaded TRID.
Love the names they come up with. What does TRID stand for?
Oh, don't ask me that one. Truth in Lending Disclosure. It used to be where you had this good faith estimate at closing. Well, the government redesigned it. They did make it simpler, but there's delays now in process. So it's just tougher. More paperwork, more fire drill at the end of a mortgage.
But so in the old days, it was in good faith that what I'm telling you is what it's going to be, and then you would find out something entirely different. Is that what you're saying?
That did happen a lot.
Okay.
Yeah.
So now this is saying I have to tell you everything it's going to be.
Yeah, basically that's a good synopsis of it, yeah.
And I think the buyer has to get that closing document 3 days prior to the closing.
Yeah, 3 days before closing. Yep, it's actually a good thing because you can't in these days now, you might tell somebody up front it's going to cost them $10,000 to close, and then they show up at the closing and it's $15,000. That can't happen anymore.
Right. Okay.
All right, very interesting, Dean. We really, really appreciate you having us and shedding us on some light on historically low interest rates that we still have. And for all you buyers out there, it's no better time to buy a home than right now. The affordability factor has never been better.
Sounds like
That's it. Call me 201-322-3456 anytime.
And Matt and I both thank you for taking your time coming in today. And make sure you tune in next week as we discuss, a very, very important topic, which is the home inspection process. We'll have a call-in guest. His name is Sergio Angione from Housemaster.
Sergio's the best.
He's a good guy. He actually did my Uncle Les's house, who was an engineer on the George Washington Bridge for the Port Authority. My uncle was very pleased with him. So,
cool.
All right. Hey, thanks for listening, and we'll see you next week.
Bye-bye.
Thanks.
Are you an expert in your field?
Do you want your voice to be heard?
Maybe you have a great idea for a show but don't know how to do it.
Well, we can make it happen.
Email the New Jersey Podcast Guys at njpodcastguys@gmail.com.